Now, we're going to look at another way of accessing the 10K data using the same company. LYV is a symbol for Live Nation Entertainment. And so what you do is you go here, this is Yahoo Finance, go down to SEC Filings, and then go down to 10K. Now the first thing we have to do is explain steps 1 and 2. Pick the company, access the 10K, and then go back 2 years, preferably 3, for the data. It's going to have 2 years, possibly 3 on the 10K, so we'll be okay there. And then right here in step 3, this is where you write a paragraph or so, just a little bit what you know about the company, maybe include some news or whatever you want to do, what the company does and why you chose it, and how good or bad you think it is. And the next thing we're going to do is step 4. These are income statement items. We're going to look at the revenue trends, cost of goods sold, any unusual items, and net income trends. So look at down here, income statement. The income statement is going to be revenue is going up year over year from 2011 to 2013, and the depreciation, SG&A, sales general administrative, is staying fairly consistent, fairly flat past couple of years. And then it looks like they had a huge gain on disposal of an operating asset. They must have sold something and made some money on it. Corporate expenses, it's going down a little bit. That's traveling, things like that, presumably. Acquisition transaction expense, that's what making it obviously to acquire something, and there was some expenses involved. And interest expense right here. Interest expense is obviously going to be tied to borrowing. So they've been borrowing fairly consistently, a little bit less in 2013 than the other years. And then we have they don't merit equity in earnings of non-consolidated affiliates, meaning subsidiaries, companies they own other pieces of, things like that. And then it shows a net loss 36,000. 36,015. Now, so unusual items, so it explains the revenue, and then we want to explain the cost of goods sold expenses. This company doesn't have a cost of goods sold because it doesn't hold inventory, but they do have expenses, and that's what you want to explain, that they've stayed fairly consistent year over year. And then any unusual items might be that they made, it looks like, a big gain on disposal of an operating asset. That could be a one-time event. Usually these things are. So that was probably an unusual item that you might want to reference and explain the net income trend. Is the net income or loss staying consistent? So we go to net loss. You know, they lost a little bit of money in 2011, a lot in 2012, and a little bit in 2013. So it's going down a little bit, but keep in mind if there were any one-time items, things like that, any unusual items that would have, reduced this loss. Next one. Identify and explain the trends for the assets, liability, and equity. So we know that the assets, liability, and equity balance sheet items. 2012, 2013, total assets. Assets have gone up a little bit from 2012 to 2013. Anything unusual in here? Looks pretty straightforward. If you're ever interested in intangible assets, you'd want to read the footnotes here for goodwill. They must have Live Nation. I don't know too much about the company, but I suspect they have brands or trademarks or logos or something that have some intangible assets that have some value. Now we're looking at liabilities. Total long-term liabilities, total liabilities have gone up. It looks like people owe them more money in 2013 than 2012, and current portion of long-term debt means they have a lot of long-term debt that's due within a year in 2013. And so then we look at equity, and it says please break down common stock and retained earnings. So we're going to look at common stock. Common stock right here. Let's break it down. It's gone up just a little bit year from 2012 to 2013. And retained earnings, since the company's posting a loss, we're going to look at accumulated deficit. Accumulated deficit is huge. So the accumulated deficit is huge, and it's getting bigger each and every year because they lost money. Now, last but not least, we want to look at statement of cash flow, the 3 different sections. Now, the first question to ask yourself is, how can a company, if it's losing money, how can they survive? And the statement of cash flow is good at telling us that. There's the financing, and investing, and operations. Cash from financing, we know there's a loss. There it is. And then we look at investing. Not a lot going on in the way of investing. Investing, this is money from other companies. It looks like cash went out the door from purchase of property, plant, and equipment. Big item there. Cash paid for acquisitions. So then we look at cash from financing. This is going to be borrowed money, and that's huge right here. They borrowed a bunch of money last year in 2012 and a lot more in 2013. And if you notice, in 2012 they paid off some of the money, and in 2013 they paid off a lot as well. They exercised some stock options right here as well. This is right here. Investing and financing are obviously non-operating items. So the company is surviving through through non-operations. Cash from non-operations is how they're getting how they're staying alive. And that gives you a nice rundown right here from financing, investing, and operations. So what you want to do is just give a detailed explanation of what is going on in each section. I would just summarize it to say, this is what I'm noticing about operations. Try to incorporate some stuff from your textbook. Show a little bit of your knowledge. And again, it's just 2 to 3 pages. A paragraph or 2 for each page, for each section rather. Paragraph, 1 or 2 paragraphs for each section, and you shouldn't have any problems writing it up. If you have any further issues, please let me know. Please email me or call me. My number's on the syllabus, and I'll get you through whatever you're stuck on. I hope this has been of some help, and I look forward to reading your papers. Thank you, and have fun with the assignment.